Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, everybody. Welcome back to another episode of Tech Talk. I am Cody. This is Andy coming to us live from Illinois.
Live.
Andy, how you doing?
I'm doing well. How are you?
Well, said heat being a little bit of a kicker.
Wait a minute. Did you just say we're coming to you live from Illinois? But you live in Michigan. You said we. You live in Michigan.
It's the
unless you're here. The editorial we
editorial we. It's the teamwork of we.
Yeah. How hot is it by you right now?
My phone says it's 92 with 65% humidity.
It's so hot right now.
So hot right now.
Did you get any tornadoes yesterday, by the way?
I don't think we had tornadoes. We had a lot of wind. I think you guys had the tornadoes. I didn't hear of anyone touching down here. So
we had a couple 2-tree tornadoes around here. Touchdown, I guess. I don't know. It got a little dicey. We had to go in the basement.
It's dangerous.
We're all here, though. We're all here. So to lighten things up a little bit in light of tornadoes and all this heat, extreme heat and stuff like that, we're paying a homage today to Collins, his excellent, I use that word sparingly, joke telling. What did the teacher do with the students? Wait, let me start again. What did the teacher do with the students' report on cheese? Go.
I don't know.
She graded it.
Oh, yeah.
I thought my jokes were bad.
Oh, so
I think
bad.
That's the first and last joke we'll have in here. I don't know. We'll see.
Our fans, I'm sure, will appreciate that. Well,
you know what they'll appreciate? You know what they'll appreciate?
You tell.
Charts. Let's go.
Heyo. 3 charts today. Two of them came at requests.
2 of them came at requests. First one came at requests internally from Erica. Thank you very much for the request. Keep them coming.
New crop, Nov Beans.
Nov Beans. I wrote in there. See ya. See you later, Nov Beans. This has been so. Let me just do something here real fast. Let's lower these guys, and so we can look more just at the price action of the chart, shall we? This has been, I mean, what's interesting is that ever since it made this double top right here, let's just go back to this right here. It has just been like, see you later, alligator. In a while, crocodile. What's interesting is it broke right to $11, and it's like this happened right here, and it seemed like it was maybe trying to potentially break itself out. And then, no, sir, not happening.
Mm-hmm.
Not today. I mean, look at this. Bam. See you later. Since then, I mean, it's just been in another free fall. It's tough to say when this thing's going to come back. You check out Grain Feed and all that stuff with Jim and Jake and all those good folks about learning more about the fundamental piece of it. But if you want to just talk just about the chart piece of it, I mean, this attempt to break out right here and just complete rejection and just continued weakness through $11 like that's just such a sign of weakness. That's brutal, right? And I'm sure there was some short covering that went on. I'm sure there was, some of the other stuff, maybe people took a shot. I could see, taking a shot at getting a little long.
Can you though? I mean, can you?
So I hear you, but I pulled up. I pulled up some of the secondary stuff, right? So we'll look at the RSI first. It's in oversold territory now.
Right.
And it's well inside oversold territory. For here, It was kind of bumping around there. Didn't really get into it and came quickly back out. So it's tough to say that it got into oversold territory. But here, in this case, it crossed that threshold on the 9th and has been there ever since. So that's a sign of kind of like a warning bell. Maybe you should be considering lightening up, assuming this crosses back above the blue. So that would be the signal, right? You can stay oversold for a prolonged period of time and continue to break. This isn't telling you to just get out and get long. This is telling you that there's kind of a warning sign. And if it crosses back above here, maybe it's time to think about at least doing something like getting out, buying some calls, maybe just, I don't know, but something to where you're at least lightening up your risk.
Right.
The momentum too is kind of it hasn't broken this previous low this is back in the 12th. So it's well below zero, has been since it had that double top. Right. Once it had that double top and then confirmed it, it's just been negative momentum this whole time. Mm-hmm. Even here, it tried to cross back over zero and just was nope, not today. But we're approaching former lows and are struggling to get further lower than that. That's probably terrible English. My wife would be unhappy about that one. But yeah, this is no good right here. So you want to be super careful. Both of the RSI and momentum is kind of telling you be a little bit careful if it gets back above oversold. This is telling you we're approaching previous lows and potentially struggling. Potentially. We'll see.
Potentially.
We started looking at a new indicator, by the way. Did we talk about this one yet? The
I
money
don't think
flow
we
index?
have. Nope.
So we'll go ahead and share a little links. What do you like? What do you like to call them? Linky poo? A link?
Olinsky?
A linksky? A linky poo? I think both are interchangeable terms for you. Paige is just she's done. She's at it for today. So we'll include a little linky poo about money flow index, but basically it talks about it's basically a look at combination of both price action and volume. So it moves lower in a more pronounced way as price action breaks on higher volume. So it's the idea that price action is confirmed by more volume, right? If you have a big up day, but the volume's horrible, super low, then the money flow index wouldn't move necessarily as much as if there was a big up day plus a ton of volume.
Mm-hmm.
I like this one. I've started to use it a little bit more. Basically, it kind of sits between this range. I'm trying to see if I can. There we go.
So let me ask you this: Would that be more of like a open interest indicator on an actual chart?
It doesn't use open interest.
It doesn't.
At least this one doesn't. So let me remove a couple 2-3 things here, and just say like, okay, here's the price action. The nice part about money flow index is that it's really good as like a divergent indicator, meaning like as this thing starts to go up, what it's saying is that the days that are higher have greater volume than the days that are lower. And so it's a nice divergent indicator, meaning like as this moves higher from, in this case, below 25 towards like 50, even if price action is breaking, it's telling you that like the price action is breaking on less volume relative to the days that it's going price action. You have days that are higher, like that volume's better. So it's a really nice way to like look at it and say like, well, if money flow index is moving higher and price is moving lower, that's another indicator that says like the price action isn't being confirmed by price and volume. Interesting that the secondary stuff is not necessarily confirming the continued weakness here in beans. So I'd be a little bit careful about staying overly short, at the very least, considering doing something to existing shorts, buying calls, selling puts, doing something.
I looked at a monthly chart. I'm going to disagree. The monthly looks very not good. You and I have talked about looking at these charts on a longer term scale, and I mean, nothing there is telling me that I want to step in right here and own it by any means.
I hear you. I'm looking at it too. I mean, it's no good, right? Let's take a look at this is a weekly. That doesn't look all that great.
No.
I hear you loud and clear. The monthly is definitely looking weak. And it's after several months of this kind of like whatever you want to call this sideways, this price action. And this, you could actually call this a bear flag too.
That's exactly kind of what I thought it was. I mean, it's starting to look just like we had them in milk, the bear flag, and then we fell apart.
Are you able to be bearish? Like, do you have, like, I guess you have right clicking capability on your mouse because unless you rip that part of the mouse off.
I got a new one from Amazon Prime Day. Shout out Jeff Bezos.
You got yourself a new one? Four tubes of toothpaste and a brand new mouse coming in hot. All for like $12. Cody's year that's it. It was your birthday the other day, by the way. So is that what you got yourself for your birthday? 4 tubes of toothpaste and a mouse?
I was waiting for Prime Day just to get them cheaper.
Dude, how about it? Good for you. Happy birthday.
Thanks. I appreciate that.
I think we've beaten beans to death. I mean, you and I are of a different opinion. I do think the price action continues to break. I'm just looking at the secondary stuff and saying you want to be a little bit careful.
Yeah.
The monthly definitely suggesting more weakness. We have still a couple weeks before the month end, right? And so there's still some time. Yeah, right. 2 weeks. So let's see how the next candle play opens. That'll really set the tone for August trade, right? Like assuming you stick this close, which will be a new monthly close or a new monthly low, right? I mean, when was the last time we were down here on a monthly basis?
2020, right?
You got to go way back. All the way back to 2020. You're right. So assuming you close it here and then open lower, August 1, that's a sign of weakness. And it's, suggesting $10.
Yeah. Right.
$10 is really, I mean, obviously it was a big number going back all these years. And it's where you really start to accelerate once you broke through it. So $10. What can you buy on Amazon Prime for $10? How much toothpaste? We'll find out. We'll find out. All right. So we have another one. We have another request. Is that right?
This one was kind of by request. I mean, he's been chirping about it enough. We're going to say it's by request, Mr.
Chirpin.
Brian Fletcher.
Chirpin.
Chirping about cheese. Just chirping.
Chirpin. So I look at this and say, like, to me, I look at the longer term picture and say that this looks like it has the potential to be somewhat of a bull flag.
Mm-hmm.
Mainly because when you think about this whole move, from here to here, you're talking about $1.50 to $2 basically.
Yep.
It's a significant move. And since then, the market has basically retraced over the last 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks, including this week. The market has retraced very little of that move. From here, basically to there. So let's get rid of this for a second. That's the biggest fight that the bears have been able to put up since moving the contract 50 cents a pound. That's just not that much. It's $1.88.
It feels like it's just been a slow bleed lower from $2 to what are we at now?
For sure.
$1.87.5.
For sure. I think you got to be really careful of this potentially being a bull flag, and you'll get a confirmation. I think like the biggest confirmation will come if you break through this downtrend right here, which would be roughly around. We got a lot of lines going here. Hang on. Call it like 192, 193. Like let's say, let's just like we'll handicap it a little bit and say 195 close. Basically, you get a close around here. You break through this downtrend. You complete this bull flag. That is a sign of strength.
So here's my question before we get to that sign of strength is, and I've had many people ask me about this. There's two gaps on this chart. The first one is as a dollar, call it $1.83, right? We go to $1.83 cheese. We fill that gap. Do we fill that first before we try to get the confirmation on the bull flag?
I don't think so.
You don't think so?
I don't think so. And gaps are unfinished business.
We are 4 cents away from that right now, and you don't think that's going to happen?
I really don't think so. Like, you think about what happened the other day with a lot of selling in the barrel, like around 199. It was clear high 190s. It was clear that price. They didn't like that price. But when you started talking about getting back down to like around 185, 184, it seemed like a lot of more buy side interest coming in, and the futures never really gave much. But the futures never really broke that much beyond like 196.
Correct.
Up front, at least, right? And so there's an incentive for buyers to taking on cash on that price, and it seems like they want it. They're willing to take ownership there. Fine. I look at it and say you don't necessarily have to fill these gaps now. We've had unfinished business for a long time. Right here, do you remember this one correctly? It took a while for that one to get filled.
Yep.
So that doesn't mean that we can't go like rip higher, and then we get into the fall, we get past getting ready for football and schools getting let out and holiday stuff is done, and all of a sudden you completely hit a wall with like seasonal demand, and we just fall out of bed, and all of a sudden these gaps are just big targets and they get filled really quickly. It's kind of the feeling that I get from that. Just my opinion, but I look at it and say what's happening right here is to me seems like more of a bull flag than anything. So we'll see. Okay,
I just figured us being 4 cents away today, where we sit from that gap, I was like, well, it would make sense to maybe fill that and, protrude higher, if you will. Protrude. But you're saying we're going higher.
Are you like reading the dictionary now or something?
We're going to try to throw some words in
your word of the day there, like
make it a little bit more spicy, if you will.
Make it just a little bit more spicy. Well, I already added a bad joke, so we can start adding in some words that have more than 2 syllables to it.
It's our show. We can do whatever we want as long as Paige says it's all right. We have one more chart, though. One more chart.
We do have one more chart for Supreme Leader Page. We do have one more chart. Right. August milk. This is what we're doing. Yep.
Class 3.
August Class 3. Let me get rid of this real fast. Get rid of that one. Out of there. Get rid of all this stuff. So this has been an interesting one because you had this potential head and shoulders. We argued, I think you and I talked about it, was like basically here. Mm-hmm. Right. And then the second shoulder was called like around here.
Right.
And you could certainly make the argument that $20 was like the neckline, and it broke through it and we started to go. And then it just failed. You had this session and then bam, that one. And we started coming back, kind of putting around. It's starting to look a little bit like a W, a small one. Right. And so you have somewhat of a potential failed head and shoulders, but here we are. You can make the argument here at 1983. This is, the beginning of the next leg of a W, which would suggest, going back up in here and testing some of this stuff. It's a 5-week month.
It is. Right?
So first of all, check out Bases Loaded, Joe Schmidt. They'll learn more about all that jazz. But it's a 5-week month. Just started pricing, and depending on how you price the barrel may not even be pricing right now. So there's so much potential for volatility here. And it's really I don't really think it's at, now it's 1985. Oh my gosh, what a great year. year I was born in. I think Nintendo.
And we have not broken below 1950 in almost 2 months to the day.
That's been a big price too. So yeah, 1985, last traded price. I just look at this and say, like, to your point, 19.5 has been a price where we struggled to break through.
Mm-hmm.
You have to go back to like early May, right? And again, when I think about like current cash and what we've seen out of buying here, when you start to get down like low 180s in spot, and then what our thought about, or at least my thought about, like what we could see out of the spot market on a chart, this is. I think you could take a little bit of a shot at owning a little bit of August here. I don't necessarily think that we just rip higher, right? I mean, if you go and complete this W, you're talking about $20.70.
Because what have you told me? You can take a shot at owning here, and you're wrong below 1950.
There you go.
Right? The risk reward, I think, is there.
The risk reward, I totally agree with that. The risk reward is definitely there, and the way the cash buying has been, it doesn't seem like they're just ready to let it fall out of bed. So you probably get a lot of like support there and stuff like that. So Totally agree. And it seems like it's worth a shot. Again, and to your point, you're wrong. You break through here. Okay, move on.
I agree.
I don't really have much else. Anything else you want to discuss?
I think we should give a big shout out to Erica and Fletch for the charts today.
Mm-hmm.
I would like to thank Paige and Lexi for both helping us get this started on Tech Talk, making sure we're on the right path and doing all the behind the scenes work. And also, we'd like to give a big shout out to Paige for her birthday this coming Friday.
Is it really your birthday this coming Friday, Paige?
Wish Paige a happy birthday in the comments. We would all greatly appreciate it. She does all the work behind the scenes, keeps us on the right track, make sure we don't get canceled or fired.
What are you getting Paige for her birthday on Prime?
Surprise.
8 tubes of toothpaste for $6.
Surprise. It's Prime. All right, everybody. We thank you for tuning in. Andy and I will be back next week with you for another awesome episode of Tech Talk. But until then, have a great week and even better weekend. We'll see you next time.
See you guys.